Alright guys, good morning. Hey, it's Chuck with B4 here. We had a little wrong turn this morning and we're making it up. But it's time for this position to start pulling back here. Notice how we got here. We're in one of our areas here that we look for a reversal. Not only that, I'm kind of high on the lower B4 here. And my kiss dots are firing. My kiss dots are a mechanical, it's a time measured move with Ichimoku when you're supposed to pull back and retest the Tinkinson. So in this regard, we need to be guarding. It may continue to the upside. If it does, that's great. If not, we want to be positioned well here to take profits.
Stop filled.
Again, I'm just paper trading here. I'm not live this morning. I don't typically trade on Fridays. It is time for the pullback here. Notice also that we had some stacked imbalances here and our overlapping of our value areas. Notice here, whenever price was making levels of discovery, the value areas were moving. Now in this regard, it had a deep pullback here, but then we got over the point of control and started pushing up, and then it was steadily moving here.
Filled.
Now we're doing our pullback as expected. A lot of times I'll take a short position here. I might go ahead and just sell red. We have been pretty aggressive to the upside. We're not completely maxed out here, so when I say come back to the Keachson, what typically happens? It's a 926 pullback strategy in Ichimoku. Price will typically come back and test your Tinkinson after 9 candles after a TK cross. So
order submitted.
Let's say we put an order right there. Our expectation would be, where is it? 1325. Our expectation would be the possibility of
order filled.
Pullback to somewhere up in here to 6411. Doesn't happen all the time, as it's a very high probability move. Typically, on a counter trend trade like this, I would typically lower my size. We don't have any, there we go, there's a little volume coming in there. Again, we're just using a 926 purely mechanical approach here with Ichimoku. Purely time-based. Doesn't always work out. see several indicators that we're using here. This is our CVD line. That's our B4 CVD line. It's given cumulative volume metric delta. Basically, buyers are in control here. So it's aggressive buying going on in the marketplace. We are above a squeeze zone, but that squeeze zone is still neutral. We haven't quite got a breakout to the upside yet. Thinking we need to probably get a good aggressive hard push would be healthy for the move to the upside, would be for a pullback here. Typically with our lower B4, we usually, I got some bands that I've drawn here. With our 210 candles, these are Unirenko style candles. Unique to B4, they are smooth enhanced. They're a very nice system, part of our package. But we still got some possible upside here. But again, I love my Ichimoku. I use Ichimoku in all of my analysis. Every day, every trade. I'll weigh it against everything else that I know. I use it for forecasting. Like I said, it doesn't always work out, but it is a beautiful thing. I'm going to limit my risk there. If for some reason it pushes past that, then I expect it to maybe make another bar or two before it makes a deep dive. But I do, looking at it, the Ichimoku, the Kijis is flat here, which is a good indication that price will stop out and return back to the Kijis. And we count candles around here. Typically, a push is 5 candles, and an average push, and a hard push is about 9 candles, and a typical pullback is about 3. So we expect 3 to 4 candles, and when we start losing momentum and we start getting these kiss dots, we're either working from the other side of the trade, which is the safer way to do that, garden profits, or if we're going to take a counter, if we're already out of the position, which I was here, taking a counter trend trade now. Again, counter trend trades you may want to, if you're going to take those, and that is if that fits in your style and you have a high enough percentage and a high enough edge. You know, sometimes it makes sense to go in at that with a little bit less risk. Maybe scale half of your normal size position on those moves, depending on your style and the win rate, your back testing, and whatnot. But what we can do is, I call it a dance floor. I like to. You guys can't tell I'm from Louisiana, I know, but I'm kind of a down south kind of boy, and when I talk about the room that you have there, I've talked about this candle dancing like a flame, and talk about how much dance floor it has. I figure I got enough that room. What I'm doing is I'm guarding behind this value. See this value area of this candle? This is what we use, the details inside of our B4 footprint. This is our footprint. And it works on just about any candle type. We have it on our B4 bars. We see the inner workings, the volume at price references here with these candles, and each candle. So you have looking at it normal, you just see candles. well, in this case, bars. Not much insight. Now, I can see, wait a minute, we're getting close to this value area moved up. That means there's some buyers in this market. The value area is moved up here. I need to guard above there. We've already touched our Tinkinson. That's all I'm supposed to do. That's all this strategy is supposed to do. Is a lot of people tell you to trade the pullback. I've heard so many people tell me, "Yeah, wait for the pullback, and then you take that. That's the next trade." Well, where's the pullback going to be? Well, I don't know. Yeah, you don't know, because you don't know Ichimoku. With Ichimoku, we understand that price is supposed to come back and pull back right there. We understand now, as soon as we get over the Tinkinson, we could re-enter that trade long. And then expect it to pull back and touch the Kijinson at 26. It's a beautiful thing. Does it always happen? No. Does it happen enough that there's edge? You better believe it. Now right here, I typically don't get long again until we get back close over that Tinkinson. Especially with a flat Kijinson. The longer the Kijinson stays flat, the more likely we are to suck back into it. We got a flat single span B. Not much trend there. Some health in the cloud there because of the thicker Kumo here. However, it doesn't look very exciting to the upside. I need to. Typically, one of the strategies with our indicator here is re-entering once we get over these dots. That would be the conservative re-entry. Now, that typically works when you got a strong momentum situation. Right now, I don't have that momentum that just tells me, hey, jump in this thing and get long again. So now's where I like to sit back and wait a little bit. To me, it still has some downside potential. May come back and touch your VWAP here. I'm not going to get back involved in it. Hey, I'm $25 ahead. Why would I risk my $25? Of course, guys, I'm not trading live today. I'm just sim trading. But anyway, just thought I'd stop in and show you how I use our 926 Ichimoku strategy here with our KISS dots. Show you some of the system. Guys, be sure to check us out at b4signals.com. Hey, looking bullish. Was looking bearish a while ago. Things are switching up. We may have, let me draw this. I don't usually do this live all the time. But the thing we call the cheek out trail. Price is likely to follow the price curve, pull back here. Maybe chop there and then possibly turn up, make that move there. That's kind of my expectation. Guys, that's just a speculation. What I'm looking at is a possible wedge and a breakout retest, forming another wedge right here. as the bigger picture. And a break out of that. If we measure that move, it does break to the upside. We got a nice target 1 and target 2. If it breaks to the downside, that's our entry, break point. Right, there's our entry and a break point to the downside. Alright guys, let's see what we have. I'm going to go ahead and cut out here, guys. Y'all have a great weekend.